we've invested more than $10 million in our employees over the past year, and we're going to continue to invest more. We're testing 4-day work weeks to help, especially our working parents kind of juggle that balance between childcare and your work. I know I deal with that all the time. This is really a people-first company. Even in an inflationary environment, you're going to see us continue to lead with our people.
Do you worry at all about a price wage spiral, not just here, but in the industry, in the economy?
Yes, and I think that this is something that many business leaders are focused on, and time will tell kind of how all of this lands.
I think the wage price spiral continues for quite some time, and I think we probably have been a lot less aggressive than we can be and than many other companies have been.
In terms of raising prices?
Yes, we've taken our time. If you look at the 20-year history of pricing in this company, we've taken about 2% a year on average. We've never taken what we could. We've always taken what we should. We have to pay people more. We have been and will continue to do so. We'll take a little bit of a margin compression on that as we've had to, and I think that's the right thing so that for the long term, Shake Shack continues to be what we're building, which is the next generation's burger joint.
Shake Shack margins have come down from pre-pandemic levels. At the same time, the company's cash position has improved.
During COVID, we actually took 2 opportunities to raise capital. We have a fortress balance sheet like we've never had before. Good timing, good planning. So when we use that money, we're looking for a great return.
The area with the highest potential return is right in Katie Fogertey's wheelhouse, advancing Shake Shack's digital transformation.
It's amazing to sit here and think that this is a company that had essentially hardly any digital sales prior to the pandemic. And when the pandemic hit, we went full force on digital with the app, web, with third-party delivery. And here we are now with 43% of our sales still coming from digital channels, even as our in-Shack business has doubled.
And that doesn't count the kiosks, right?
That does not count the kiosk.
So what kind of investment was that? Was it a home run? Is that something where you're like, Randy, this paid off big time?
Well, it's something that we continue to invest in, and we continue to see opportunities to improve our app, improve that guest experience, improve the ways that we're incentivizing our guests to really lean into our digital channels. If you simply kind of look at what the higher frequency we get from those digital guests, moving more and more of them into the channels and continuing to invest to drive frequency of that base, it's a really good recipe for strong long-term traffic growth.